Hello everyone, this is Jim Lucy, editor of Electrical Wholesaling and Electrical Marketing with episode number 101 of the Today's Electrical Economy podcast series sponsored by Champion Fiberglass. Champion began producing epoxy fiberglass conduit and fittings in 1988 and in 1989 developed the first conduit from epoxy resins that had flame resistance and low smoke characteristics. This met the most stringent codes and specifications. Episode number 101 of the podcast series will offer an update on residential building activity. We'll also be taking a look at where the electrical economy stands in face of the craziness in the stock market the last couple of days. And of course, we'll be reviewing those 5 key weekly economic indicators: initial unemployment claims at the state level, rail freight car traffic, the Baker Hughes rig count, oil prices, and copper prices. For the week ending July the 27th, the advanced figure for seasonally adjusted initial unemployment claims was 249,000. That is an increase of 14,000 from the previous week's unrevised level of 235,000. The 4-week moving average was 238,000, and that is an increase of 2,500 from the previous week's unrevised level. The national unemployment rate increased to 4.3% in July from June's reading. As you can see, the job market has softened in recent months, and all eyes are certainly on the potential of a rate cut in September, and possibly even more than one rate cut if you listen to some of the economists and prognosticators on many of the financial news channels. We'll be watching this closely, in particular in the electrical market, looking at any changes in the number of jobs in both the key contractor and industrial markets. Despite the uncertainty on the jobs picture, we did have 6 states that had very large decreases in unemployment claims. The 6 states with the largest decrease in unemployment claims for the week ending July the 27th were Texas, claims down 6,232, now standing at 25,453. Ohio saw its claims dip 2,429, down to 5,340. New York also saw a large decrease, 2,290, down to 13,255. Florida now standing at 5,258, claims down 1,801. Tennessee standing now 2,736, claims down 1,516. And the state of South Carolina claims now at 1,993, down 1,018. On the flip side, we did have 3 states with some fairly sizable increase in unemployment claims. Those 3 states were Michigan, claims up 4,033, now standing at 14,655. Missouri saw an increase of 3,352, its claims now at 6,230. And the state of Massachusetts up 2,070, claims now standing at 6,672. Other in the top 5 were Virginia, up 663 claims, now standing at 2,708, and Minnesota up 511 claims, now at 3,705. An interesting leading indicator for the overall U.S. economy is freight rail traffic, and it's a measure of the amount of raw materials and finished goods being shipped by rail. The best source for this data is the American Association of Railroads, or AAR. It publishes this data weekly at www.aar.org. The freight rail traffic is also not showing any real signs of a slowdown or a recession. For the most recent week, total U.S. weekly rail traffic was 508,496 carloads and intermodal units. That's up 5.3% compared with the same time last year. You look at all the freight traffic out on the rails, total combined U.S. traffic for the first 30 weeks of 2024 was 14,106,686 carloads and intermodal units. That's an increase of 2.3% compared to this time last year. In both of those numbers, both for the weekly rail traffic being up 5.3% and that 2.3% year-over-year number, I've been following this freight traffic going over the past 4 or 5 years, and for a good chunk of that time, we were actually running behind the year previous. So to see these numbers holding up as they have over most of 2024 is actually a very good sign. The other thing that's a good sign is the total weekly rail traffic being at 508,496 is up substantially over the year-to-date number, which is 470,881. Now let's dig into some of the individual freight categories, and you'll see where some of the leading indicators are being supported. Petroleum and petroleum products, once again, up the most at 10.4% compared to this time last year. It's followed by the total intermodal units, which at 8.5%, and grain at 6.5%. If you're wondering what an intermodal unit is, it's basically if you ever see a freight train running past, It's those flatbed cars that had the tractor trailer containers sitting on the back there. Laggards include coal, down 16.4%. No surprise there. Coal's been down quite a bit over the past couple of years, and it's always showing a decline, it seems. And non-metallic minerals at minus 7.9%. Now let's take a look at the oil market. And if you're probably familiar with the Baker Hughes rig count, if you track the oil market at all, it looks at the number of oil and gas rigs that are operating. This data is available by state, by basin, and nationally at www.rigcount.bakerhughes.com. This slide gives you an idea of the largest oil and gas deposits. It gives you a good sense of just how many of the large oil players are in Texas and Oklahoma, and how big an area the Marcellus gas region covers in Pennsylvania, Ohio, and parts of West Virginia. Baker Hughes rig count through the week of August the 2nd was actually up 3 rigs, with oil up 5 rigs and gas down 2 rigs. At the state level, Oklahoma showed an increase of 2 rigs. Rigs are down a total of 11% compared to this time last year, a drop that's actually less severe than what we've been seeing in recent months, when the percentage has been down in the 18% range for quite some time. The current price of WTI crude oil as of August the 5th is $72.02. That's down more than $4 from Friday's price of $76.23, and that's a 6% decline from Friday. A lot of that decline you can attribute to the market sell-off on Monday, and also to some degree about the current rumblings from Iran about a retaliation against Israel, which certainly would affect oil traffic in the Gulf if that did happen. The average year-to-year price for a barrel of oil is $79.99, so we're just a little bit below that due to the sell-off activity. Economists like to call copper pricing Dr. Copper because it's a leading economic indicator for future economic activity, since copper is used in so many industries. The construction industry is among the leading markets for copper because of its use in wiring cable and copper plumbing pipe. The current price of copper as of August the 5th is $4.09 per pound. It's down about 10 cents per this month, but does not seem, on the surface, does not seem to have been affected by the sell-off in the stock market that's happened over the past couple of days. The average price for copper over the year is $4.03. So we're still, despite the slight sell-off of 10 cents per pound in August, we're still a little bit over that average there. So no discernible impact from the market sell-off just yet. The struggles of the residential construction market are well known due to the higher interest rates, the lack of new homes for sale, and restrictions on land use, but there are still some areas of the country where home building is remarkably strong. Let's take a look at some of the data through mid-June. We have some very familiar metros as market leaders in single-family permits through June, and 6 of the top 10 are in either Texas or Oklahoma, which has very often been the case over the past number of years. Houston and Dallas are in the top 2 spots, with between the two of them, 52,000 single-family permits. That's just crazy. Phoenix, Atlanta, and Charlotte are the other markets that have over 10,000 permits through June. Single-family construction, as you know, is extraordinarily concentrated. The top 10 markets account for 132,709 permit, and that's 26% of the total. U.S. total, about 514,000, just over that permits. 26% of the total, these top 10 markets. And we mentioned Houston and Dallas. Other markets in the top 10, Phoenix, Atlanta with 13,000, well, close to 14,000, really 13.8. Charlotte, over 10,000 permits. Austin, 9,500 permits. Tampa, 8,000 permits. Nashville, 7,600 permits. Orlando, 7,628 permits. And Jacksonville, Florida. As you can see, all Sun Belt and some externally activity. Some markets are down a little bit. Orlando's down about 11%, but all the other markets in the top 10 are showing some pretty decent increases. Many of the largest markets also are showing the biggest increases. Phoenix, for instance, is up over 5,000 permits compared to this time last year. Dallas is up more than 4,400 permits. Wilmington, North Carolina is a bit of a wild card with an increase of 2,748 permits. Its total permits is up at 3,800. So an increase of that, its total permits last year were just about 1,100 permits. So you can see why that's accounted for the over 260% change from this time last year, but it's still an impressive increase. So as I mentioned, 2,748. Some of the other markets that are up by more than 1,000 permits include Houston, up 2,669 permits, Austin up over 1,800 permits. San Antonio up 1,720 single-family permits. Atlanta up 1,709 single-family permits. Cape Coral, Fort Myers, Florida, and the southwest coast of Florida there, 1,319 permit increase. Indianapolis up a healthy amount. Don't often see them amongst the top 10 markets in residential. And it's up 1,268. And Las Vegas, 1,183. Let's take a look at multifamily permits now. The New York metropolitan area, which covers all of New York City, out into Long Island, southern New York State, northern New Jersey, and even into eastern Pennsylvania, absolutely crushed all the other metros for multifamily permits. Total permits, multifamily side, 22,391. That's an increase of 7,555 permits, up 50.9%. Dallas and Phoenix were in the number 2 and number 3 slots with permits of 11,166 and 7,359 respectively. Miami was number 4 with 6,937 permits, and Atlanta had 6,859 permits. Top 10 markets for multifamily permits were up in total, accounted for 39% of all permits. Other metros in the top 10 are Los Angeles with 6,213, Austin with 6,050, the Washington, D.C. metro with 5,227, Tampa, St. Pete, 5,067, and the Seattle metro with 4,684. As mentioned earlier, New York City metro had the biggest increase in multifamily building permits through June, up 7,555. Other metros with large increases of more than 1,000, and a couple of them you don't really hear much when you talk about large markets, but Asheville, North Carolina had an increase of 1,392 permits, up 252%, now standing at 943. Columbus, Ohio, up 1,390. That was a 51% increase. They now, through June of this year, they were up 4,077 permits. And Kansas City, up 1,073, very large increase also, now sitting at over 2,028 permits. Other markets with large numbers of building permits, and a whole bunch of them that you don't really see much when you're talking about large building markets, but here they are. The Greensboro High Point sitting at 1,525 permits. The Omaha, Council Bluffs metropolitan area, that's at 1,643. San Diego, you'll see them come in one of the reports for active residential markets, but 2,979, up 40% over last year. How about the Trenton-Princeton market in southern New Jersey, not too far from Philadelphia metro? The current permits up to 1,136. That's up 810, also very large percent increase. Bowling Green, Kentucky, up 1,312 units. That's up 806, that's 159%, sitting at 1,312, as I mentioned. Tampa, St. Pete, now over 5,000 residential permits for multifamily units, up 17%. That's a 735 unit increase. That wraps up our podcast for today. Again, a special thanks to the folks from Champion Fiberglass for sponsoring our Today's Electrical Economy series over the past couple of years, and for sponsoring today's podcast. That's episode number 101. Please contact me if there's any other type of economic data you'd like to cover in these podcasts. Our next presentation will be on August 19, 2024. Until then, hope you get a chance to take some time off and stay healthy, be happy. Look forward to talking with you in 2 weeks.